Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. After an action packed week with the US elections and FOMC meeting, this week looks calmer for market participants. The key question now is whether last week's themes, rising dollar strength and yields, will continue. Meanwhile, Chinese stocks are facing pressure after a major legislative meeting left investors disappointed, falling short of the hoped large scale stimulus to boost the economy and counter deflation. Beijing did announce a 10 trillion yuan or $1.4 trillion program to help local governments manage hidden debt, but stopped short of measures to stimulate consumption. Good morning, JK. What are some key themes you'll be watching this week?
Good morning, Swaraj. Yes, after the big, event last week, both election and FOMC, we are back to watching the economic data. And Friday, we saw the Michigan consumer sentiment data from US coming much better than expectations. Even the future expectations were also better. Inflation, long-term inflation was slightly higher at 3.1 versus 3%, but the 1 year forward inflation rate was lower at 2.6%. Apart from that weekend, we have also had the Chinese inflation numbers, and once again we saw that the producer price index was in a negative territory, deflationary trend continuing, and the CPI also rose less than expected. Which is a reflection of the fact that despite the stimulus that China has made so far, it has not been able to boost the consumption or the demand. That's why the prices have been falling. Then the stimulus that China announced on Friday, it was more towards public finances and not really aimed towards either the stock market or the consumption. But of course, if the local governments' balance sheets are strengthened, eventually they may be able to spend more. So that's more of a medium-term, aspect. Going forward in this week, I'm going to watch the CPI number from US that is going to be announced tomorrow, and the expectation is that there can be some cyclical uptick in the inflation number, but may not be too much of a concern for Fed because it's not going to jump in a big way. And we will also have the retail sales number, an indication of the consumption pattern in the US economy, which is so far holding up very strong. And so these two key macro numbers from the US economy will be watched for indications on how the economy is moving, and maybe some influence on the Fed's monetary policy for December, which Powell has kept open because he has said that we will move towards lower rate, but the pace can be dependent on the economic data. So overall, the macro data, of course, we'll also have GDP numbers from the UK, which will be closely watched. Now, these numbers are not going to broadly change the pattern of the dollar direction because that has been set by larger factors. US dollar continues to be more attractive now because not just the yields, but also the stock market have been doing very well, much better, again into a new territory and strongly rallying. So US dollar will continue to attract investments from outside. On the contrary, we have the political situation in Germany, which is not very encouraging. The leader of the coalition government is likely to call for a confidence motion in December itself, and in that case, the elections may be held in January. So the uncertainty continues. Japan, we see Ishiba probably going to take oath with a minority, number, but then with the support of some coalition partners. So not a very strong, political setup for pushing through reforms or taking broad decisions on the economy. So economists so relatively are looking weak. We already know that UK has a very weak fiscal after the budget that we saw in a couple of weeks ago. So US dollar still continues to enjoy the exceptionalism, so the dollar will continues to be strong. Euro likely to test the 1-year low of 1.06, and perhaps the dollar yen also 155. Chinese one is already closer to 7.20, where reportedly the state-run banks are selling dollars there. So we will await the bigger decisions or views from the Trump government on the tariffs, taxation, and then of course the Ukraine war. All these things are awaited. It will take some time because Trump will not take office until January 25th. So that's the picture for the dollar. It remains strong. And for the rupee, the picture is again same. Dollar remains strong, mainly because the outflows are consistent still, and RBI is continuing to limit the rise of the dollar through their intervention. And the pressure is added because the dollar abroad is also stronger. Asian currencies are weaker, so that will keep the dollar rupee on the bid side. But already having moved about more than 30 paisa in this month, or rather in the last 1 month, I would think the pace of rupee depreciation may be slowed. So I still feel 84.50. Maybe a cap for some time until we see any change in the pattern of flows, or if it continues with the same intensity. So we are in a dollar strong environment. Nothing to say that this is changing right now, but we will of course look out for any fresh factors that may emerge, and also the Trump's any indications on the policies in the days to come. Thank you.
Thank you, Jack. And the key things to look out for would be the US CPI, which is expected that it will slightly rise higher, and the retail sales again to measure how the US economy is doing. One thing to note, of course, is the Fed has kept December meeting decision open, which means even a pause is on the cards if inflation is stickier. So that's something market participants would be keenly watching. On the other side, US exceptionalism continues to show because the other economies, especially Germany with its political uncertainties, even in Japan, PM Ishiba is expected to continue with a minority government. Again, minority government, which may make it difficult to push reforms. So somewhere that political stability which US is offering is going to play in the overall theme of US exceptionalism, which is showing quite strong numbers even on the economic front. For rupee, nothing new to write home about. Stronger dollar index and outflows has not changed the picture, and we continue to be rupee continues to trade weaker, possibly getting capped at 84.50. That's it from us today. Thanks for listening. Tune in tomorrow for the latest number of financial markets.